One of the questions I was asked is, what has been the biggest impact of COVID on lending? And Steve, like you, I remember so clearly a year ago, and I was predicting pretty quickly the demise of my career, and what else am I going to do with my life? And and then I started realizing rates were plummeting, and started feeling a little more optimistic. But then we started losing investor after investor, especially on the jumbo side. So we had investors pulling out of the market. Even loans that we had locked in certain cases, we weren't able to pull through, and we had to find alternatives. So that was a very scary couple months there. Then things started to, I think everyone was aware that it became our new reality, and some of these investors came back in. Some still haven't, actually. But the biggest impact, I think, that we see today is self-employed borrowers are really impacted right now. And what I mean by that is it's way more invasive process to get a mortgage when you're self-employed, in terms of we have to get right up to date profit and loss statements from the business. And as well, we have to get, now they've just increased it across the board pretty much to 3 months of business bank statements. So we've got to not only show the P&L for the year or year to date, we've now got to show 3 months of business bank statements showing deposits going in that would justify those numbers on the P&L. And that's fully COVID driven. That's new. We've never had to do that before. So it's made jumbo, especially jumbo self-employed borrowing, just more invasive and a little more difficult. Well, quite a bit more difficult in certain circumstances. Other than that, I would say, we are seeing a lot of appraisal waivers on the conforming loan side. So we're getting more and more of those where we don't even need an appraisal for a transaction. So in some sides it's loosening up, and other sides it's more difficult.
Why, Noel, are you seeing appraisal waivers? Are the money sources simply more confident in the market than they had been in the past?
I think that, so the appraisal waivers always come from the Fannie Mae or the Freddie Mac automated underwriting systems that we run all those types of files through. And I think what's happening, Steve, is that, they've just built these bigger and bigger databases of comps and sales in the area. So as they have those bigger databases they can access, they start feeling more comfortable with values as stated. And of course, a lot of these, you won't often see an appraisal waiver with less than 20% down. As you put more money down or on refinances with more equity, we're starting to see them just be more comfortable with the value that we're stating. Because I think those systems are basically cross-referencing all these other sales that have happened, and these databases just keep getting more robust that they can access. So I think that's the answer.
Are you seeing an increase in any specific buyer type, investor buyers, second home buyers, or are we still primarily focused on just regular old single family primary residence buyers?
Well, the biggest type of buyer we're seeing is desperate, but I'm kind of kidding. I think that you're right. Like I've seen, especially in the last, I would say 4 or 5 months, a lot more wealthy or people with high incomes coming from coastal areas, and in particular Google folks or those types buying here. I just had one that was buying an investment property here over $1 million. And so I think that, yeah, we're definitely seeing that. We're seeing a lot of people look in the mountains too, at condos and townhomes, second homes up in Vail or Silverthorne, those types of places. So back to that theme that you mentioned, Steve, of like people wanting to have at least an escape from a big city. So I've seen that quite a bit. And it also really pointed out to me the tale of two economies that we've got going on that you referenced. And in that, COVID hit some industries really, really hard and just destroyed them. And on other industries, it wasn't impacted at all, or in some of them got even better, like, things that are tech driven and such. So, but both types of buyers, definitely more second home and investment buyers, and a lot of wealth from the coast, I would say.
It's interesting, Noel, you bring up the mountain markets, and anecdotally there, I had a little information about the mountain markets. Aspen and Telluride is a really good example that they are nearly $1 billion greater in sales than they were in the last year already.
Yeah.
And their school enrollment has shifted. Typically 30 to 35 students enrolled in any given school, and now it's 150 new students. So really what that highlights is that we've got these buyers that are moving to to these luxury communities that simply didn't exist,
Yeah. Yeah. It feels like if you can afford to get out of the cities, then people were doing it or still are doing it.
Yeah. So the big question, Noel, is where do you see interest rates going? What's the forecast?
Well, there's a little graph on the screen, and I just did a little snippet of this was yesterday, but so this is mortgage-backed security pricing, and we want to see pricing going up for the prospect of lower or even steady rates. And you can see that's been the opposite, especially starting in kind of February. We've seen pricing just go down and down with a couple good days here in March and then back down again. So this means, so rates, and everyone's probably heard this, rates have gone up. We're up maybe 0.5% since where they were the low points of COVID. Mm-hmm. And frankly, the person that I follow most closely, who's been fairly accurate through all this, believes that rates are going to continue to go up in a stair-step fashion, at least for the next 2 to 3 months. It gets pretty murky after that. We do think that, we are on track for a recession in 2022 or maybe 23. Of course, it's hard to predict when, but the fiscal withdrawal from the government, that will start to happen unless they change policies or something. And that should be a signal for the potential recession. Recessions are good for mortgage rates. So does that happen late this year, or does it move into next year? That part's hard to know, but I do think we're in for heavy volatility for the next few months with a general bias towards upwards. And the longer term, I feel pretty comfortable that rates could be even lower than where they are now or as low as they are now. So people buying in this next few months may have an opportunity to refinance in the future. All this should be the framework should be that rates are still very, very low, like near historic lows. So to say rates are high, I had someone call me just today and said they read an article that rates are quite high right now, and that's laughable. They're very low in a historic sense, and jumbos are very low too. So we don't know, but I do think we're going to see a lot of volatility for the next few months and probably up.
All right, Noel, anything more to add before we move on?
I don't think so, Steve. I think, I was really interested to see what you said about the residential market. It tracks exactly with what I'm seeing on the loan application side. I've found myself writing pre-approval letters, sometimes for 3 or 4 different clients for the same property. And that's always an indicator to me of the lack of inventory out there. One thing I will add is, people ask me, are we having appraisal trouble when we do need appraisal? Not yet. I would say, I'm going to knock on wood right now, but we haven't seen a lot of appraisal problems hitting value, even though most of these or many of these properties are going over asking price. Yeah. So I think that's a good sign. And, just it supports the fact that we have a lot of appreciation happening right now.
It's an interesting comment on appraisal. Appraisers tend to look backwards. They tend to look at the past, while the market tends to look forward. And when it comes to pricing, or at least they don't look back nearly as far, and they tend to push forward a little bit. So it's a little surprising that we have not seen any appraisal issues. And I would share that sentiment. I have not had any appraisal challenges as of yet.
Yeah.
Okay. Thanks, Noel. That's great.
Yeah, thank you.